We're glad to have you back. You're still watching Business Nigeria. Global economic growth is projected to remain at 2.8% in 2025, unchanged from 2024. That's according to the United Nations flagship report, World Economic Situation and Prospects 2025. While the global economy has demonstrated resilience, withstanding a series of mutually reinforcing shocks, growth remains below the pre-pandemic average of 3.2%, constrained by weak investment, sluggish productive growth, and high debt levels. The report notes that the lower inflation and ongoing monetary easing in many economies could provide a modest boost to global economic activities in 2025. Let's cross to the United Kingdom and talk to Mr. Gbenga Ogunrinola. He is an investment and financial advisor. Mr. Ogunrinola, Happy New Year to you, and it's good to see you 2025.
Thank you, Tolu. It's good to be here again. Happy New Year to you also.
Yeah, I'm sure you've seen, I've highlighted some of these major challenges in my introduction: high debt levels, cautious optimism, and all of that, looking at 2025. What is your overview of this moving forward?
Yeah, so there's really no year that doesn't have its own challenge, and 2025 has its own challenge too. And I believe that those challenges are not new, and there are things that the market will be able to resolve on its own. And moving forward, we should see a lot of activities in the year 2025, a lot of exciting things happening in the year 2025. You've talked about inflation. Inflation has been a major bane of development and growth over the years. And we see that reduce in the year 2024 significantly, even though the last reports that the US brought out showed that their inflation is a bit dodgy, and it's like a flip-flop. But generally, we've seen inflation come down, globally. We've seen the world come strong after the pandemic, and gradually returning to that gradual growth level globally, without probably leaving any major economy behind. So when we look at the economy generally, post-COVID, I believe that it's done well relatively, because of the shock that the COVID had on the global economy. So going forward in 2025, like I said, there's no year that doesn't have its own challenge, and 2025 will have its own, particularly with the United States having a new man at the helm of affairs. It's going to actually ticker the global economy. In a way, there will be some reactions and counter reactions, which would also bring about a lot of alignment and realignment. And the world would just get ready for a very exciting 2025. Exciting in the sense that, it could go any way, but really looking at it, I believe that the shocks that we've had over the years are probably over, and what we should be expecting is to see some level of growth and development all around.
Indeed, I agree with you. Every year comes with its own spectacular issues, development, and all of that. But let's look at markets and how they are reacting to all of this. President-elect Donald Trump is getting into office very soon, I think in a few days. And we're looking at all of how this will shape in trade across the global markets now. What are you seeing around that space? And of course, what is also impacting on the economy in the United Kingdom?
Right. So in the year 2024, maybe we'll start looking at how the year ended. Generally, it ended on a very good note in 2024. We had the major economies in the world, their stock markets, having a very good year-to-date ASI, with the NASDAQ leading the pack of about 28% return on investments, followed by the S&P with about 23.3%, and we have the Nikkei about 19%, the DAX also about 18%, the FTSE was also a bit good, cumulatively about 10%, even though in terms of ASI it was just about maybe 6%. So we see that generally the global economy and stock markets did well in the year 2024. Now, moving to 2025, we've seen a lot of sharp reactions already in the year 2025. We've seen markets respond very quickly and being very volatile to news that that comes up, and we're going to see more of that in the year 2025, where there will be so much volatility and reactions to news and information that comes into the markets, probably than what we've been having in the past before now. But generally, I think investors and the market generally should look at a year where they would want to see the consolidations that have taken place in the last 2-3 years post-COVID, and try to see where the direction is going to be this time around. Already with Trump coming in, there's been a lot of realignment, and there's been a lot of expectations, especially in the area of digital currency, in the area of artificial intelligence and all that. And we are likely to see more of those things impact the global economy and the capital markets also significantly this year. So I think that investors generally should look at a situation where they would want to have a cautious attitude towards the global markets this year, and also see that maybe they are actually investing for the medium long term and not really for the short term. But generally, the market is looking exciting, and I believe that there's going to be more talk about artificial intelligence technology stocks in the coming years and in the coming months, because that seems to be the direction that the global economy is going, and nobody should be left out in this drive.
Brilliant stuff as usual. Rising trade tension is something that we must look at. Mr. Ogunrinola, you would agree with me what's been happening, Russia and Ukraine, that war is still on, and the other war too on the other side. And everyone is talking about the impact of this on trade relations and all of that moving forward. And even this affects the oil market one way or the other too. So what do you also make of this, and how do you think this would impact investors' decision moving forward?
Yes, we cannot but look at the various crises going on globally. The Russia-Ukraine war, at times it's very hot, and you see as if it's going to turn sour, and at times everybody is shedding their sword again. Yeah. So there's been that flip-flop, and we are going to see probably a better direction with the Trump administration coming into place, because I believe that Trump would want to see that this thing is ended, and whichever way it's going to go, I believe that it should be a plus for the global economy. I want to believe that the two sides, that's the Ukraine and the Russian side, they are wary. I mean, this war has cost so much, and I believe that they are both looking for leeways to kind of just shed their sword and ensure that the economy is back on stream. The two sides have been hit badly, and I believe that the economy are not in good position currently. So if Trump comes in and is able to weigh on the two parties, we should see that escalation diffuse, and we'll see growth. Now, that is going to invariably help the European economy in particular, and the global economy generally. Stability in the Middle East too is something that is expected with Trump coming into the helms of affairs, and with all his talk about wanting to de-escalate the war. We believe that that would also help in bringing about peace and stability in that region. Now, with the stability in the Middle East, stability in Europe, I believe that we should see a more robust economy generally, and probably the price of oil too being stable, though maybe low in some cases, because I mean, where there is no escalation, we don't really see so much volatility in the price of oil. So we generally, I mean, when there's peace globally, I believe that the economy will thrive better in all areas.
As we wrap up this conversation, for the big boys who have the hot money, the cash, and they're moving it everywhere, and they want to make some profit, that's talking about the guys with the FPIs now, portfolio investors. What do you think they should be looking at in 2025? You know, we in Nigeria will want more of FDIs, but we know those guys will come with this hot money. But you are an investment person. Where do you think the direction will shift to in 2025?
Yeah, so I made mention of the fact that the artificial intelligence and technology sector is really gaining ground, and the talk in this part of the world is really in that direction. And I believe that Nigerian economy and the Nigerian government should not be left out in this. Governments are heavily investing in these areas, and they are spending billions of dollars, you know, investing in those sectors. And I think we should not be left out. If you look at India, for example, some years ago, they invested heavily in the technology area. It's paying off for them currently. And India is becoming a force to be reckoned with in the area of technology and artificial intelligence. And they are selling some of these things even to the developed world. And I think we should be able to do something like that in our own way too in Nigeria. Invest heavily in that sector, and we'll see the reward very soon. So investors should focus in that area, you know, the artificial intelligence, the technology sector. They should focus on areas where we see support even for these sectors, you know, not directly in the sector itself, but even those areas where they provide infrastructures and support for these sectors. You know, talking about things like electricity and all that. I mean, they are all related. So they should look at that sector. But the crypto sector, the digital currencies is also another area that might likely see a lot of boost this year because the current president coming in, or rather the incoming president of the United States, is likely to toe that line of really giving so much push to it. And so we might see that also coming up. So digital currency too is one area that investors should be looking at very closely this year. And I believe that investors should also have this medium-term mindset this time around, just to see how things go, and not a short-term mindset, because I mean, there could be bonds. The way the market is this year is going to be very volatile. Volatile in the sense that you could wake up and I mean, you could sleep and wake up and you see something else, you know. So it's just good you have that mindset of a medium term. Already we are seeing that within the last day or two, we've seen so much change in the global stock markets just because of a news that came into the market yesterday. I mean, there's been so much sharp reaction, and that's what we are going to see all through this year, very sharp reactions. And people should just have that medium-term mindset so that they would not in any way get burnt in the course of investing.
Well, I must say it's an interesting conversation as always. Mr. Gbenga Ogunrinola is an investment and financial advisor. He joined us live from the United Kingdom, London. Thank you so much. Do enjoy the rest of your day and hope to talk to you again.
Thank you, Tolu. It's always a pleasure. Enjoy the rest of your day.